All right, greetings. So today is Wednesday, October the 12th. It's approximately 12:37 p.m. So the market's been open for 3 hours roughly. Put on a trade today. So I put on this trade here on the SPX. Took in $135. As you can see here, I made close to 50% of that already. So the market has been pretty much trading sideways, meaning that when the market opened this morning at 9:30 a.m., it was at 35.90. As you can see here, it's at 12:30, it's at 35.88. So it's pretty much been trading sideways, as you can see here on this 30-minute chart. And the reason being is because the CPI, the Consumer Price Index, numbers come out tomorrow, and so the market is very uncertain. Market participants aren't quite clear what those numbers are going to be, and so this is the reason why you see this sideways trading here. And so what I'm thinking about doing is either put it on another call credit spread. And so this call credit spread here, I sold the 36.45. Just pull up my points. So I sold the 36.45 and I bought the 36.50. So I sold 3 contracts. The width of this vertical call credit spread is 5, right? So I'm looking to, because I feel like the market is going to probably sell off as we get closer to the 4 o'clock hour, which is when the market closes. I'm probably going to put on another another vertical call credit spread, on the call side, of course, because a vertical call credit spread benefits from the price of the underlying, and the underlying in this case is SPX, right? So it benefits from the price of the underlying actually dropping in value. So I suspect that as we get closer to the 4 o'clock hour, the market is going to sell off. So I want to be on the upside or the call side that will essentially benefit from, if my speculation is correct, will benefit from the price of SPX actually dropping in value. So I'm going to watch it, for the next couple of hours here and decide whether or not I'm going to take in additional credit by putting on another vertical call credit spread. And I may just add to the one that I already have on. I may just sell the same 36.45 or 36.50. However, if the price continues to drop, then the value of these strike prices will drop as well. And so it's going to behoove me, if I want to take in a decent credit, to get closer. So maybe sell the 36.30 and buy the 36.35 at some point later on in the day. So I'll come back and let you guys know what I decided. By the way, if you haven't already, visit my website at cubicleinvesting.com. And on my website, you can actually download my free ebook on how to trade options, right? So just by putting in your first, last name and email address and clicking on Get My Free Ebook, and you'll have the option of downloading my free ebook. And also, once you do that, you'll be inserted into my email distribution list, and you will start receiving my weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time, where I give really good advice on investing, and also from time to time I give stock recommendations and also cryptocurrency recommendations. So you definitely want to be a part of my email distribution. All right, so I'm back. Whoa, okay, so I just so it's 2 o'clock p.m. I was looking to put on this additional, not additional, but to put on an additional vertical spread, actually. But to put on this vertical put credit spread, and I was waiting to get filled, but just as I started the recording, I got filled. So as you can see here, so in addition to the vertical call credit spread that I have on, I am also now in the vertical put credit spread. Right, so I sold the 35.40. I sold the I bought the 35.35 on the put side, right? This one's on the call side. So I have taken in an additional what's that, $120, right? So initially it was 135, so now up to 255, right? So again, it's 2 o'clock, so the FOMC minutes just came out, and basically, no surprise. And the FOMC meeting minutes basically, discusses or conveys or cites the policy issues that were discussed in the actual FOMC meeting, the Federal Open Market Committee meeting that took place. So consider that there were no surprises in the my mic on here. Considering that there were no surprises from the FOMC meetings minutes, the market is still continuing to trade sideways. And so, as I mentioned before, it opened at 35.90, and so it's still roughly at 2 o'clock. It's still roughly around 35.90. So is that roughly 84 and some change. So I'm looking for the market to stay in between my short strike of 35.40, and also on the put side, right? And on the call side, my strike price of 36.45, in order for me to walk away with the entire $250. So as you can see here, of the 255, I've already made roughly 40% of that, so it's $102. And I put this trade on in my Thinkorswim account as well. So this exact trade is what I put on in my Thinkorswim account. So we'll look at that as the time progresses, or basically during the last video segment for this particular recording. So I'll come back in roughly about an hour or so to give you guys an update as to how this position is working out. All right, so it's close to 3 o'clock. So as you can see here, the price of the underlying is exactly where I need it to be, right in between my short strike on the put side of 35.40 and my short strike on the call side of 36.45. The expected movement of the underlying has contracted significantly over the last 30 minutes. It was actually at around 21 and 22 about 30 minutes ago. Now you can see it's plus or minus 15. And so if you recall from watching some of my previous videos, this brown bar represents the expected move of the underlying. Underlying is SPX, and then this bar also corresponds to its actual value here, so plus or minus 15. So in other words, the price can move up or down 15 points. So if we take a look at the current P&L, so as you can see here, I've made 85% of the $255. So I've made $219 so far. Right, yeah, so everything is looking good. The price has been really moving sideways. This would have been a great day to put on an iron butterfly, or iron fly as they call it. But nevertheless, I prefer the iron condors because it's something I'm familiar with. But yeah, so when the market opened this morning, it was at 35.90, and so as you can see here, roughly 1 hour before the market closes, and it's right around that 35.90 price point, where the market opened. So yeah, pretty quiet day, relatively easy money. I probably should have went in a lot heavier, maybe potentially try to get $1,000, but I don't like to get greedy, so I like to get between, as I mentioned before, between $300 to $500 per day. So yeah, I don't like to get greedy, because as soon as you think you have the market figured out, that's when you will start to lose money. Yeah, so I'll come back roughly before, right before the market closes, and let you guys see the final, I guess, review of this position here, and also the position I have in my Thinkorswim account. As you can see here, I'm up roughly $219 in that account. So, little over $400 so far, so not too bad. All right, so I'm back with the last update. So it's roughly 3:53 p.m., approximately 7 minutes before the market closes. So as you can see here, the price of SPX is dead smack in the middle of my short strike on the put side of 35.40 and my short strike on the call side of 36.45. You can see here the price, the expected move of the underlying SPX has contracted significantly. So plus or minus 3 right now, whereas before, it was around, well, when the market first opened, it was around 35. So as the day progresses, the expected move of SPX contracts. So if we look at the position itself, so as you can see here, I made the entire $255 on this iron condor, right? Iron condor, which is essentially a vertical call credit spread and a vertical put credit spread. And then in my Thinkorswim account, I have made $287. So a little more than $500 on today trading. Really quiet day, not a lot of movement from the underlying SPX at all. Like I said, when the market first opened, it was at 35. It opened at 35.90. As you can see here, it's closing right around that same price point. So the market pretty much traded sideways all day today. And so as I mentioned before, if you do decide to pull down my free ebook, just pull up that here. Give me a second here. Thought I had it up. Oh, here we go. Okay, yeah. So if you do go to my website, cubicleinvesting.com, and you pull down my free ebook, I put it in your first and last name and also your email address, you will start receiving my weekly newsletter called the Cubicle Weekly Reader, where I talk about various investment strategies, and I also give from time to time stock recommendations and also cryptocurrency recommendations. And so this week's newsletter was entitled "Long-Term Focus Will Pay Off," right? So this came out October the 10th, and so essentially talking about the importance of having a long-term focus in spite of the fact that the market is considerably down, right? So we're in a bear market, and so if your investment horizon, in other words, if you have at least 5 years or more to invest in the stock market, then you certainly want to look at what's taking place right now in the market to your benefit, right? Because in the long run, it's certainly going to pay off.